Hey everyone, it's Evan here from the Trade Risk on Friday, December 22nd, here with a weekend market recap video. We're going to cover all the major markets, the current market environment, and then finish off looking at some sector analysis. This week's video, we're going to be talking about small cap biotech and energy stocks, which are surging to the upside this week. We saw a TLT, which had the largest one-week decline in over a year, and we have markets that are closed on Monday, so enjoy the holiday and enjoy the long weekend, the time away from markets. We're going into the final trading week of the year. Then we get to start fresh in 2018. So we're going to talk about all this and some more right now. All right, we'll jump in here with the S&P 500. We're still going to be looking at the cash market because that SPY ETF did go ex-dividend about a week or so ago. So that chart is a bit skewed to the downside. So we're going to look at the cash market here. You can see we finished very flat here on Friday. It was a pretty flat week when you're looking at the indices overall. There was a good amount of movement underneath the hood, which we'll get to later when we start looking at sectors. But the S&P 500 tells a fairly flat and boring story, all things considered, for this week. So when we look at the action, we had most of the gains actually occurred on Monday of this week. We saw this gap higher, a little over 0.5% is how we finished on the day, up to about 26.90, slightly above that level, actually closer to 26.95. And then for the rest of the week, we basically moved sideways with a slight drift lower. Tuesday through Friday, you can see we really kind of just chopped around with a slight drift lower, traded in about a 15-20 handle range. 26.76 to about 26.90 is where we spent the most of this week kind of trading in between. So when we look at this daily chart here, you can see we still are above a rising 8 and 20 period bullish aligned moving averages, and you can see basically we've carved out this consolidation, this slight flag, I guess, if you will, right underneath all-time highs. It's not necessarily the worst look in the world for a market that's in an uptrend, but for now we continue to consolidate, and this line right in here is still basically my line in the sand. I think we talked about this in the last video update. This 2660 level, this is the level I'd be paying attention to. It's going to coincide more or less where the 20 period EMA opens up on Tuesday, and it also coincides with the highs here from early December, and then this slight little kind of washout, this little bear trap in here back from the 14th. So I think there's a couple of different psychological levels to be paying attention to right around this 2660 level, along with some technical levels that I think we would technical indicators that are kind of lining up there as well. So 2660 would be sort of my line in the sand for the more active traders, or maybe I wouldn't even say intermediate term, but just on that more active term, 2660 would be what I'd be paying attention to. If we look at the weekly chart, you can see we did make progress this week, 28 bips, 7 handles to the upside. It's not the prettiest looking weekly candle out there. It's kind of floating out to new highs, but we closed off of the highs of the week, a little off of the lows of the week, and we're just kind of sitting up here almost like a wait and see type of candle on which way this ends up confirming through the lows or through the highs into the last trading week of the year. But keeping in mind, especially when looking at this time frame on the weekly chart, this uptrend is still monstrous. We are still making new highs. We are still above the 8 and 20 period moving averages on the weekly chart, and we are still making new momentum highs here too. So there's still a lot to like on the weekly. It certainly means we can pull in, again, that 1 to 2% pullback is kind of always in play. I don't think we should ever be surprised if that happens at any point. But for now, the bulls on multiple time frames here still remain very dominant, and again, I'd be looking at that 2660 level or so as my line in the sand to get a little more defensive and cautious there for the active trader. If we go to small caps, I think you got an interesting look here as well. Basically a similar pattern. We had this nice pop up on Monday, this time up 1.35% in the Russell, but then we spent the rest of the week basically carving out, again, a sideways to slightly lower range, and we spent most of the week in this 1.153 to 154 range, right underneath these prior highs back here from the 4th of December. So again, when we look at this, we do have this consolidation. We are above some rising moving averages here, the 8 and 20 period. We are holding up above this nice 2-day pop from Friday the 15th to Monday the 18th of this week. So I think looking at this market, as long as we can maintain, call it 152 or so, if we can keep this higher low in place, ideally we hold up here where this consolidation has happened over the past 4 days. And if we can eventually, you know, if we can try and get a breakout to the upside, then I think we can have a nice run into year end here. We do have a position. We did reestablish a position here in the Russell this week. So we are long the IWM for some additional exposure to complement some of the other longs that we have on. It is a bit premature as we don't have the breakout necessarily, you know, in action yet. But we are hopefully, you know, looking for this higher low to stay in place, and then a rotation and kind of a run up into year end. If it doesn't work out, if we start to fall back below into this old range back here, then you know, all bets are off on that potential breakout. So that's the Russell. And finally, if we look at the Qs, we did see a little bit of lagging behavior here. Again, when you look at this chart, not necessarily the most bearish picture that you may think of. When we look on the week, it was down on the week 28 cents, so it was virtually flat but slightly down. And you can see again, we had the kind of the breakout week last week with some strong strength in the Qs. We talked about it being really the leadership group last week, and it just spent most of this week consolidating and maybe a little rotation, maybe a little finalizing books into the year end for some of the big names that have some big holdings in these concentrated core group of stocks here in the Qs. But all things considered, you know, technically it's still holding up above 156.60. That would be the very short-term line in the sand. That was essentially the breakout level, the highs here from November, which just basically got underway at the end of last week. So 156.60, I think that's the level to pay attention to for your real active traders. If we start to fall below there in some of these moving averages, then we're back in this old range, which again doesn't have to mean it's the end of the world, doesn't have to mean we pull back in a huge fashion, just simply means we would need more time and we'd need to respect more consolidation to be occurring in this market rather than a trending market. So that's the Qs. That's all of the major averages. In fact, let's get into some other of the markets. We'll go to TLT next. So TLT was definitely a market to pay attention to this week. This had the largest down week of this year, going all the way back to, I believe, November 11th. If I've looked at this appropriately, this would be the biggest down week. It was about 2.79% lower, taking out the 20-period EMA here and the 8-period EMA on the weekly chart and breaking this trend line. It's been really messy in here over the past couple of months, basically, but you can see it starting to do some technical damage here and fall back into this old range. Again, it's still not the cleanest chart in the world, but you could argue that you've got a pattern underway here, and this would be a week one sort of breakdown that you'd want to be paying attention to. So when we look back here at the daily chart, I think the next critical line in the sand's 122.70 or so. This has been support for the past 6 or so months. It was resistance at the beginning of the year, so that would be the level to be paying attention to for your next real sort of intermediate term time frame. But for now, momentum is to the downside. We didn't see a tremendous amount of volume come in on this breakdown, which is interesting. We saw slightly above, but for the magnitude moves that we saw this week between Wednesday and Thursday, you'd figure or Tuesday and Wednesday, you'd figure we'd have a little more volume coming in, but maybe it's the time of year that's impacting that as well. So TLT sellers in control here on short and arguably intermediate term basis. When we look at oil, we talked about this consolidation, and it is starting to try and resolve itself to the upside. Doesn't have a lot of enthusiasm behind it. Volume's been light, but it's just basically been crawling itself higher. Originally, I was looking at this 1165 level as kind of the breakout level. You can see we closed right at it on Friday, but again, not seeing much urgency here yet. So I'd probably want to cheat it up and, maybe just look for new highs above the November highs at this point. But USO, again, continues to respect support right now, and it continues to hold these moving averages. So it's in the bullish territory. If it starts losing some of these fast moving averages below 1120, that's when you could take some action and potentially, manage some risk or reduce that position. Natural gas, 2.14% move here on Friday. And if we look at the weekly chart, did close higher, still in a really rough position here on the weekly chart. It's been in a pretty good downtrend now ever since really, October, November, when it started to get volatile and start to break to new lows here. I mean, arguably all this year it's been in pretty rough shape. Spent a lot of that time consolidating sideways though until that October, November timeframe. At any rate, it's picked up in volume here. You're starting to get a little bit of choppy kind of back and forth action. Again, intermediate term, there's too much technical damage here for me to want to own this. If you're a short-term active trader, I think you can play around here, but right now sellers basically in control, but there's going to be bounces that you active guys could take advantage of, guys and gals. GLD next, 52 basis points to the upside here on Friday. Nice run. I mean, this thing has really V-shaped off of this 117 level. Remember, it was pretty oversold in here. It was breaking down, looked pretty ugly, and then it got that mean reversion, kind of popped back up in to fill this gap, and then it's continuing to get back above this 120 level. Last week, I believe I mentioned that I want to see a couple of closes above 120, and it's pretty much done that at this point. So if we look at this weekly chart now, you can suddenly see it's coming back into a lot of this old supply in here from the past several months, and you can see it's retesting this very, very flat 20 period EMA. So for me, it still looks like a bit of a headache here, just in terms of, there's no real dominant trend right now in GLD. Short term, the bulls are certainly in control, and I like it, the fact that it is above 120. So I'm paying attention to it. There's nothing too much for me for my time frame, for my style right now, but I do like the fact that it has reclaimed 120. That stopped the bleeding there. Let's see, basically how this can settle in here, and then if it can move sideways and kind of consolidate, build some structure in here, then maybe it would look interesting for a potential continuation trade, but still going to be a little suspect just given the way it's kind of V-shaped higher here without a ton of structure and sideways movement. So the more active you are, I think the more opportunity you would find there. And silver's pretty much in the same boat, 1.65% to the upside. And you can see once again here, it's just pretty much V-shaping off of the lows that it made, or the reversal that occurred back on the 12th of December. It's getting above the 20 period EMA. Still has a lot of supply up here from around the 16 level back in early November. So this one's still got a little more work to do, but right now, short-term bulls are in control. So that, I think, covers all of the major markets. Let's take a look at some of these sectors here. XLE was really on fire this week, up 5% and starting to really leg higher here from this consolidation. Remember, it had this very kind of quick and potent rally off of these lows throughout August, September, and the beginning of October. And then it spent about 3 months just kind of moving sideways, dancing in between the 66 and, call it 70, 69 level. And this week, it finally had this nice breakout move above all of this previous supply in here. And it looks like it's trying to really leg higher here for a second leg higher, maybe come back and retest some of these old levels up here right around 75, 76 in the longer term months. If we go back down to that daily chart, you can see good volume coming in, starting to pick up some nice expansion in range on some of these bars. So XLE, nice sort of rotation into it this week. IBB, so biotech, I think, was interesting this week. The large cap biotech didn't quite move a whole lot. When we look at IBB, it was up 32 bips on the week, not really changing a whole lot here. But when we look at the equal weighted, which tends to have more of the smaller caps in its weighting here, the XBI ETF did see a 3.4% move to the upside here, getting back to the recent weekly highs and holding at the 20 period EMA here on the weekly chart. So when we look at the daily chart of the XBI, it is coming back into some recent highs here, right around $85, and there's some supply in here from September. So it's a tough chase. It's tough to initiate right now, but we do have some nice movement basically over the past couple of days, and that momentum we could see it could carry into the year end here. XBI, I'd be paying attention to it. Do have some exposure there ourselves. XLB also acting well to new highs here. Weekly chart breaking to those new highs. Materials looking good. And finally, IYT on the upside stumbled a bit here the past 3 days, but still trading at highs. If we look at the weekly chart, again, you can see it's really starting to get going. It spent 2 weeks just moving sideways, and now it's breaking out again. On the downside, we got XLU, which continues to be in really rough shape, made its way all the way back down to nearly the lows from July, and where a lot of the supply traded in March and April. So pretty fast unwind here in utilities as soon as it broke below this 56 level. Looks like it's damaged goods. It's extended, so dip buyers, you could probably tactically get in there and play for a bounce if you're interested in that on utilities, but it's probably ripe for that. Not something I'm not all that interested in, but this 52 level could be a spot to do that tactically at. IYR, very similar kind of rate sensitive sector here. Real estate is finding a little bit of a bounce here on Friday, but for the week it was down 3%. A really ugly looking candle breaking basically a 6-week range to the downside and closing below this trend line and the 20-period EMA. So the IYR on a more structural level is a bit concerning and maybe not as bad, but XLV, this is the healthcare ETF, falling from this top of this range around 84. Again, I think if it can hold in around this 20-period EMA, that would be constructive. The weekly chart still looks very constructive here as well, but you can see it was underperforming on the week, down about 1%. We're going to see if the bulls can kind of step in at the top half of this range to put a higher level base in play for the end of the year into 2018. So that is the recap for this week. I hope everybody enjoys the long weekend. Markets are closed on Monday. Enjoy the holiday and the time off. We get the last 4 days of trading into next week before we got 2018. So thanks so much for watching. Do subscribe if you like the videos, and I will talk to you on Tuesday.